Hello and welcome. In this guide, brought to you by the experts at Pro Tax Accountant, we're going to tackle a question that honestly trips up thousands of people every year. How exactly do you get back into this self-assessment system after you've had a break? Well, let's dive in and find out.
So, has your financial life changed recently? Maybe you fired up that freelance business again, or you're running out of property for the first time, or maybe your income has just shot up. If you've been out of the tax return game for at least a year, well, it's probably time to let HMRC know you're back. So, first things first, do you actually need to reactivate? Let's figure out who needs to get themselves back on HMRC's radar.
Now, this is a really important point. Reactivation is not for first-timers. This is specifically for those of you who filed before, took a break for at least one tax year, and now, for whatever reason, need to start filing again. You're not starting from scratch, you're just switching your tax obligations back on. So, who exactly are we talking about here? See if any of these sound like you. Are you a sole trader who's restarted and is now earning over £1,000? Or a new landlord with rental income hitting over £2.5 grand? Maybe you've become a higher earner with your income tipping over that £100,000 mark. It also catches families earning over £60,000 who are claiming child benefit, and really anyone with other untaxed income, like dividends or tips, that's over £1 grand. Okay, listen up, because this next part is vital. For any income you earned in the tax year that ended back on April 5th, 2025, you absolutely must tell HMRC by October 5th, 2025. Seriously, that deadline is set in stone, and missing it can cause some real headaches.
And trust me, ignoring this is a really bad idea. Failing to reactivate your self-assessment comes with some pretty significant financial consequences, starting with some painful penalties.
Just to put some numbers on it, if you fail to let them know and you're more than a year late, the penalty can be as high as 30% of the tax you owe. Think about it. On a £2,000 tax bill, that's an extra £600 in penalties, just for not getting in touch on time. And it doesn't stop there. On top of those penalties, they'll also charge you interest on any tax you haven't paid. As of July 2025, that interest rate is a pretty hefty 7.75% a year. You can see how this all adds up very, very quickly.
Right, let's move on to the practical stuff, your roadmap. Here is your step-by-step guide to getting reactivated without the stress.
You've basically got two options: go online or do it by post. Look, for pretty much everyone, online is the clear winner. It's way faster, you can track it, and it all links up nicely. The post is really just a backup plan, maybe for super complex cases or if you don't have internet access.
And using the right form is key, so don't get this part wrong. If you're a sole trader getting back in the game, you need Form CWF1. If it's for other income, like from a property, you'll need the SA1. And for partnerships, things are a bit different. There are separate forms for the business itself and for each individual partner.
The journey itself is pretty straightforward. First, just double-check that you definitely need to reactivate. Then, get in touch with HMRC online and explain why you're back. They'll send you a confirmation along with your unique taxpayer reference, or UTR, and boom, you're ready to start getting your paperwork together.
Ah, the classic problem. You know you have a UTR from years ago, but you have absolutely no idea where it is. Okay, first off, don't panic. This is incredibly common, and there are a few simple ways to track it down.
Your first stop should be your online government gateway account. If it's not there, try HMRC's handy UTR Finder tool on their website. You could also dig out any old tax returns or letters from HMRC, and if all else fails, you can give the self-assessment helpline a call. Just, maybe make a cup of tea and be prepared for a bit of a wait.
So, how long does this all take? If you do it online, you should get your UTR within about 10 to 15 working days. By post, you're looking at more like 2 to 4 weeks. The big takeaway here? Don't leave it to the last minute. Try to get it all sorted by mid-September to avoid that mad October rush.
Okay, part 3. Life after reactivation. You're back in the system. So what happens now? What do you need to look out for?
Right, here's something that often catches people out, so listen closely. It's called payments on account. Basically, if your tax bill is more than £1,000, HMRC will ask you to pay half of your estimated next year's bill in advance. It's like a down payment, with one chunk due in January and the other in July. It's so important to budget for this, because it can be a real shock if you're not expecting it.
So, to get ready for that first return, you've got to get organized. Start gathering all your records: invoices, bank statements, receipts. Keep a close eye on your allowable expenses, because this is how you lower your tax bill. And of course, get that January 31st online deadline in your calendar and try to get in the habit of stashing away about 20 to 30% of your income for tax as you earn it.
And speaking of expenses, some of the most common ones are things like a portion of your home office costs, business mileage for your car, equipment you buy like laptops, and professional fees like hiring an accountant. Remember, every single pound you claim here is a pound you are not paying tax on. It's well worth it.
And finally, let's pull all this together with your summary and next steps. We'll recap the absolute must-know takeaways.
Okay, let's lock these in. Number 1, that deadline is October 5th. 2, use the right form. 3, online is always fastest. 4, find that lost UTR right away. 5, expect your UTR in about 10 to 15 working days if you apply online. 6, your online return is due by January 31st. 7, budget for those sneaky payments on account. 8, don't forget to pay your national insurance. 9, claim every single allowable expense you can. And 10, try to save 20 to 30% of your untaxed income to cover that final bill.
Look, navigating all of this can feel pretty daunting, with all the different forms and deadlines. To make sure your return to self-assessment is completely smooth and stress-free, it is always a good idea to speak with an expert. And for that expert guidance, you should get in touch with the team at ProTax Accountant. They can handle every single step for you, from the reactivation right through to filing your return. You can reach them by phone, on WhatsApp, or by email. Thanks so much for joining us.